the size, the nature of the investments, the sectors that you are choosing, and the risk that you as well as the founder is now willing to take.
Sure.
And how is that different for a growth stage, let's say vis-a-vis, we'll come to early stage, how it differs, yeah?
Yeah, we, as a part of ICICI Venture, have always focused on the growth stage of the business, and we are quite pioneers in that space. We have invested in more than 70 companies over the last 15 years. I have seen more than 35, 40 companies going into IPOs. We have sort of dealt with, when we are looking at the growth sectors, we have dealt with healthcare, we have dealt with finance, we have dealt with consumers, manufacturing. And the asset allocation actually changes, depends on the nature of the economy during that particular, the years we are investing. Historically, we have done a lot more of, the financial institutions. This was a time in 2005, 2007 era. We have done a lot of pharma during that time. 2010-11 onwards, we did a lot of consumers. We have sort of been invested into some of the known companies like Theobroma. We have invested in Co-Colors. We have invested in Cello, Libas. I mean, these are some of the assets, that we have just invested on the consumer side. Manufacturing, we believe there is a very strong momentum in the manufacturing, and India can, as Abhishek was saying, can become self-reliant. We have invested into specialty chemicals. We have also invested into some of the core manufacturing industries. Our focus has always been India-centric growth. We believe that India has a lot of opportunities for a lot of these manufacturing companies to grow. For example, we had invested into a contract AC manufacturing, which is called EPAC Durables, which is one of the largest AC manufacturing in country, and the contract manufacturing. The kind of capacities that are getting built, when we started, it was just one plant, and today we are seeing 4 plants, across India. And these are all catering to the Indian markets. Now, that is the kind of growth that we are seeing across, and we believe that there are a lot many more new opportunities where a lot many new entrepreneurs are coming and seeding a new sets of industries. Currently, we are seeing a lot of momentum in the consumer tech vertical, in the fintech vertical. We see these are the verticals which will scale significantly over the next 5 years. There's obviously a lot of consolidation also happening because it's quite fragmented. And our idea is to basically identify the right set of players, because the funnel is so big that you need a lot of skills to identify the right set of players and then support them in their growth journey. We have been active in most of the boards where we are, and that's why we only sort of choose 10 to 12 assets in a fund rather than working with the larger sets of companies, because it allows us more time to be spent with each of the portfolio companies. And our value add has been significant in most of the companies because we become a sounding board for a lot of founders, where we have invested. That actually gives a lot of comfort. And in terms of the value add, and we can speak at length, but more is how you basically engage with the Indian founders and how you basically take him along the journey. And we have sort of done this journey with multiple founders, and that gives a lot of comfort to the incoming companies that these are the right set of partners to work with.
Great. So we'll come to value add, and I'll come to each one of you because it's a nuanced play. In fact, we are really intrigued to know how exactly does a private equity fund add value to the founder, right? So we'll come to that. But before that, I'll come to you, Dr. Ray. In terms of the landscape, I remember Rajiv telling me that when he started investing in the Indian deep tech scene back in 2009, when he came in first time, people forget deep tech, they did not even know what is tech. So I think from there till what we are today, a lot has changed, a lot of innovation and a lot of focus has come in, but yet we had the recent controversy where the minister was pushing the private equity industry to, or the innovators to actually invest more in making technology, which is India for the world. And if you can throw some light, what are the early trends that you are picking up?
It's an interesting question because as a not only as a deep tech sector agnostic fund, but personally as an innovator,
As an
I
innovator,
don't
yeah.
really believe in India for the world. It has to be India for India first. You have to have a good proving ground before you go out globally.
Right.
If you can't be competitive at home, you're not going to be competitive abroad in the long run.
Right.
There may be, ecosystem issues with regard to how you do business in India that can limit you, but you've got to learn to overcome them. I think the core 2 or 3 things that I can think of. First is that it is always easier in a seed stage fund like ours. It is always easier to hook ourselves to a national priority. So, for example, the strategic sector, aerospace, defense, semiconductors, these are national priorities because you have to play catch up. Other national priorities, I can go through a whole laundry list, but everybody here would know that. Where the social sector offers opportunities to connect with the consumer, so healthcare was an example that we took, but you can also take agriculture as an example. You can also take housing as an example. You can take climate tech, comfort. So many examples are possible, but they have one common theme. Pure play software will become harder and harder. If you're not linked to hardware, the life cycle of software is shortening so much that if you invest in software, you might as well invest when it's a little mature, because in 3 or 5 years, it could be supplanted by something else. So we typically tend to hook ourselves to something that has a hardware connect, either in the investment company itself or in its broad customer base and use case. And the wider the hardware connect, the more de-risked you are to begin with.
Okay. Very interesting.